Is that like right now? Does that mean like right now?
No, we are live right now.
Oh, sweet. Fantastic. Does anybody want to sing for the first like 15 seconds?
We don't have Mark in the
Where's
voice. Mark is the voice, by the way, on nicknames. Welcome out, everybody. We are starting our webinar here. Matt, you're more than happy to sing, recite some poetry. I would listen to anything.
Poetry. I would not be the dude you go to ask for the right poetry. That's not who I am, right? Yeah. I could do some anti-Fed poetry if you want. Like
some haiku.
Oh, with thy Fed, printeth thy money.
Shakespearean right there, Cody. Well done. Hey, everybody, welcome out to Tackle Trading's Trading 101 Getting Started webinar. Like we talked about the other day on the halftime report, we wanted to just really kind of come together. And yes, I did try to get my video working. The coaches can attest to me making that effort, but we had some technological difficulties with it. So I apologize for that. But we wanted to come together as a community and really just sit down with the community and talk about getting started. You know, we've been getting a lot of questions recently from new traders, which, let's face it, guys, in your careers, can you identify a moment in your careers where you have had such massive interest in the financial markets from a global perspective?
That's a great question. And obviously, I mean, at this point, probably not. I can't remember. I mean, obviously, when markets started really ramping and running in 2017 on the stimulus, there was interest, but nothing like this, Matt.
Nothing like this, though. I mean, that was like, hey, let's take advantage of it. I didn't see a rush of the new traders, wanting to take their savings account and put it into the financial world. I personally have never seen interest on this type of level. And, at Tackle Trading, we've been getting a lot of interest from those individuals. And like I said on the halftime report the other day, I don't care what the reason is somebody gets interested in the financial world. I'm just glad they got interested in it. But one of the things I've been seeing, and Tim, you can attest to this, we've been seeing story after story just recently about this, is they when you're very, very new, you make a lot of mistakes, right? I mean, every one of us have our share of mistakes in the financial world. There's no doubt about that. And you can overcome that long-term if you have the right community, the right systems, the right people around you, and so on and so forth. But there's a lot of people that aren't going to be trading in 6 months from now, guys. They're just not, because they didn't do it the right way. And so I wanted to put on a little bit of a webinar for our community to really bring the coaches together to tackle the conversation for these new traders, because, whether we want to believe it or not, at some point we were the new traders in the room. We were the ones making all those mistakes. We were the ones doing the dumb things. We were the ones that people like us back then said, oh man, that new generation of traders, they just don't know what they're doing, right? And you know what? They weren't wrong, but we survived it. And so will these new traders if they have the proper, systems, rules, communities to withstand some of the volatility shifts. So I want to welcome out our coaches, and one by one, I want to do a quick intro of that. Greg Holmes. Greg, how you doing today? Now, by the way, Greg has a new nickname that is absolutely going to be adopted at Tackle Trading. So make this work, everybody. Make this work. Old Money Holmes. Greg loves his dividends. He loves his cash flow. He loves that old money philosophy. So Old Money Holmes, how are you doing today?
I'm doing absolutely fantastic. Glad to be here. This is exciting. I'm geeked. This is my arena. So
I love it. I love it. Well, welcome to the show there, Greg. Glad to have you. Cody Mackey. Cody, you are the Forex kid, and you are the oldest kid in the history of mankind. So welcome to the webinar. Cody, how you doing today?
I'm doing fantastic. And, it is funny because everybody calls me an old man whenever I'll start getting on to you guys and different things. Like, Cody, how old are you? But I'm doing fantastic out here in Hawaii.
He's Benjamin Button. He's 76.
When we say Forex kid, can he do like a every
like Billy the Kid?
Do it like this because that's Red Raiders. I'm not all about that. I'll do like this. Yeah. Get the Aggie whoop in there.
Get the Texans. I like that. Good job, Cody. Welcome to the show. Tim, there is not a good nickname for you, and I am not saying T-Dog, so not going to happen.
Nicknames have to be earned. They have to be natural. And when I have a new good one at the age of 40 here, I'll take it. But as of now, no, just Tim. Emily is
like
so
it. I
sad.
like it.
Coach Tim, I
will
guess.
tell you who you remind me of is Rounders, and no, not
Worm.
the good. Yeah, definitely Worm.
Yeah.
Definitely Worm.
Yeah,
So
Ed Norton.
if you've ever watched Rounders and you know Tim, you know what I'm talking about. But welcome out, Tim.
Well, he had an
Glad to
ace
have
up his sleeve. You could call me Ace. You know, I'm okay with that.
No, we're going with Worm.
He's trying to get the cooler nickname. He's like,
Emily.
call me Ace.
Yes. Coach Emily, my darling, one of my best friends in the world. Emily, you're just the queen of absolutely everything. Like literally, you are our queen of tackle trading. We love having you here. Famous women in trading, brand owner, just going out there doing what you do on a daily basis. Thank you for being here.
If I'm the queen, how come I didn't go first?
Well, I was actually going to save it to last and say the last is the best, but then I thought you might be upset with that. So I saw your face in the video and I was like, I gotta go to Emily next.
All right, I'll give it to you.
I'm already going to have to deal with your anger because Greg went in front of you. So like I wasn't going to have Tyler go in front of you, or it was going to get just flat out ugly. Speaking of Coach Tyler, you are the architect because you can take any technical setup and wrap the best option strategy around that. Tyler, how you doing tonight?
You know, I'm good, Matt. I like that nickname. I'm gonna make my kids call me that.
You should. You are the guy that created the Matrix. That's what you
right.
are.
That's
I like it. I like it. No, Coach Noah Davidson, Delta Dog Noah Davidson. How you doing, Noah?
I'm pretty good. I thought we agreed to go with a different nickname though.
Oh, did we?
But oh well, I'll take it.
I was
Want to be the
scrambling at the end.
architect.
You're so
yeah.
upset, Tyler.
Tyler is
got
the
that
architect.
name. Okay, and then obviously we have Coach Frank, the breakout king. Frank, how you doing today?
Doing well. Good to be here live. What's up, team?
You know, it's a pleasure to have all of you guys. And honestly, what I want to do today is I just want to have an open conversation to a certain extent. But what I really want to first start with, guys, is just if again, we're speaking to that next generation of traders, right? And all of us, and I know I struggle sometimes because some of the most basic things I just assume everybody should absolutely know. And we know that's not the case. So what I want to start with, guys, is just what is one of those things, if you could go back in time, you know, Greg, you've been trading since 07. Cody, you've been trading since 15. Em, you've been trading since 15 as well. Noah, you've been since 03. I know you made your first trade in 98, but that was kind of, you know, a little sketchy there. So let's go with the 03 year there. You know, Frank, you've been training since 06. Tyler, you've been training since 06 as well. So you guys have a wealth of experience in the market, both as a trader, as an educator, as an investor, as an entrepreneur. And so really what I want to start with, guys, and we're going to open up to Q&A as well. We're going to make this interactive, but if you could go back to your younger self, and again, speaking to that next generation of new traders, what is one piece of advice you would give your very new self that you've learned along the way? Mm-hmm. Let's start with Coach Greg. Coach Greg.
Oh wow, you've asked me to narrow it down to one thing. That's what makes it difficult. The reality is I think the biggest mistake that I made is not to define who I was or who I wanted to be. I started out as an investor and then became a trader. When those two lines get blurred, it can be a little difficult to keep it straight. So my best advice to anybody new entering the world of trading, investing, whatever you want to call it, define that within your goal structure. So, you know, if you want to be a passive investor, then just build goals around that. If you want to be an active trader, build goals around that. And if you do that and you make it clear, you get some clarity to that, your success will come so much faster than you can possibly imagine. But I think if you spend twice as much time on the goals and the planning stage as you do the actual, pressing the buttons, you're going to be far more successful than you can imagine.
Yeah, there's an old trading philosophy: plan the trade and then trade the plan, right? And a lot of those new traders, they fell in that initial step. They always think about, oh, where am I going to buy? But they don't necessarily think, where am I going to get stopped out? Where am I going to target? Where am I going to exit those positions? And I think that's a very important point. And you also mentioned the distinction between trading and investing. Greg, one of the things that I've found along my way is one of the biggest reasons people, I don't want to say fail, because they never really even start, right? You can't call somebody a failure that doesn't really give it that old college try here. But one of the reasons why new traders just fall off the bandwagon a little bit is they simply don't understand the language of the marketplace. And that term, the trader versus the investor, how would you describe the difference between trading versus investing for you?
Well, I think it's actually kind of easy if you take it in the right perspective. For me, an investor has a longer term view. A trader is going to have a shorter term view. Now, for each person, that's going to be different, right? You look at a Warren Buffett, a long-term view is 30 plus years. Okay. Yeah. For someone who's new to trading or investing, their long-term might be 5 to 10 years. Okay. Or, maybe you're a little bit older and you're just starting in the financial world, and maybe you've got 15 years until you retire. Well, if you take that longer-term view, that, roll out to that long-term perspective, then you're probably more on the investor side of things. When you start looking at trading, you might narrow that focus down. I know I started out doing a lot of investing, and now I do a lot of trading and still a lot of investing. But I separate that in the fact that my investing, I may look at a position and I may look at that position in a different way so that I can hold that position for the next 5, 10, 15, 20 years. Okay. That's my investing portion of it. Whereas when I'm trading, I day trade, I swing trade, I position trade. I'm looking at much narrower focuses. Sometimes I'm focusing on the next 4 or 5 minutes when I'm day trading. Then swing trading, I might be focusing on 2 weeks. So I think what you have to do is, as I was saying, define your goals. Say, what? Do I have a long-term perspective, or do I have a shorter-term perspective? And do I want to do both of those things? You can do both of those things, but it's going to take, you're going to have to do some plans, put some plans together. And you're also going to have to learn the differences between those two things. And I think perspective is one of the biggest things that you have to realize.
Love that, Greg. And you mentioned something about the separation of the investment versus the trading accounts. That's a hot button topic for a lot of old school traders, right? And it's a question we get from new traders all the time. How do you manage that portfolio, right? Do you manage a portfolio with long-term within the same type of an account structure as the trading account? I want to go to Coach Tyler on this question. Tyler, when you get asked about account structure, and we're going to get into accounts here in just a second, what advice do you give people who are trying to make a decision if they want to run, long-term retirement accounts within the same account structure as an active trading account?
I think you can. You just have to have the ability to compartmentalize in your head, because you don't want to be looking at a long-term position. I think that there are grouping features you can use in like Thinkorswim, where you can say, okay, this section of my account is long-term, this section of my account is short-term. Mm-hmm. I don't have a problem with it if you organize it properly. Yeah. I just think if you're going to do longer-term investing, you want to learn a little bit about retirement accounts and other things that give you tax advantaged status, just to be efficient.
Tim, what do you have to say about the account structure in terms of running a trading and a retirement account?
First of all, welcome out, everybody. It's always great to have you out here. And the one thing I would say, Tyler, I would disagree. I know you can. For advice for a beginner, and we're here to talk about beginners. I understand if you are a veteran, you know how to use software and systems and all that kind of stuff, you can do it. I 100% would recommend for beginners to separate the accounts. And I'll tell you why personally I have that perspective. I think it's too easy to make the mistake I made when I was young and capitulate on your investments. You hit a profit target, you take profit. Yeah. I mean, how many of us sold Tesla at like 50 or 100 or
40 for me
at some point in our career, or AMD at 20 or 10 or whatever it is? And so investing mindset is so different. And I think it's easy to make mistakes when you're new. And to try to avoid one trap, I would separate them. I would get two accounts.
I can see scenarios where an active trader can commingle them, but you're also the dude that doesn't like mixing their corn with their mashed potatoes, right?
That's right.
So I mean,
I'm OCD a little bit. Yeah.
You are OCD that way. You're also the guy that color codes your Google Calendar, right?
Doesn't everybody do that?
No.
I mean,
listen, you need to go to therapy regarding your Google Calendar. But I do see some pretty substantial benefits for separating the two. And for new traders, it can get confusing running simultaneous retirement accounts versus trading accounts. But for me, it's when you get to the advanced style and you're really starting to understand delta weighting portfolios. Your delta weight on a short-term trading account will be vastly different than your bias on a long-term account. Vastly different. And so I think from a portfolio management, once you kind of get to that skill set, it is easier to manage an overall portfolio when they are segmented from one another. But I do maintain that you can run them if like Tyler said, if you have the ability to separate them within the same account. Would you agree, Tyler?
Well, yeah. And in terms of my own trading, I have separate accounts, right? So maybe I'm just too quick to tell somebody do whatever you want to do. I'm just getting along.
You're a free agency type guy there, huh, Tyler?
I'm right there with you, Tyler. I have
right.
4 accounts with 4 different brokers to keep my mindset in the separate things. Like this is my retirement account. This is my trading account. This is my Forex account. It keeps my mindset different between every account.
I think Tim makes a great point, though. I mean, because I'll tell you, it's sometimes when you got a lot of active trades on and you're trying to manage those and make decisions about the short term, sometimes that does impact your long-term analysis, right? Because you're looking so much at those short-term trades, and then all of a sudden you're like, oh, but Apple's overextended, and it's like, I think it's going to come down, and you're like, well, your horizon, like Greg was talking about, is 30 years. You shouldn't micromanage that, right? But sometimes it is difficult in that capacity. I want to go to Coach Tyler. Same question I asked Greg there to begin, Tyler. If you could go back to 06, 14 years ago when you were 3 years old, what would that advice be that you would give your 3-year-old self?
That's a good joke there, Matt. I'm chuckling on the inside right now.
Thank you. It's a compliment, by the way.
Jokes are supposed to make you chuckle on the outside, Tyler. So I'm not sure it landed if you're not doing that.
No. So this actually dovetails nicely with this topic. I started a Roth IRA when I was 28, but I started trading when I was 21. So I missed 7 years of being able to throw money into a Roth that, I've been doing it ever since from 28, but I look back and I say, well, I was saving money from 21 to 28, but you have limits every year, and every year you wait, you miss out on throwing thousands of dollars into a tax-free account. And so that's actually one of the main regrets I have, where I could have started earlier. I got married at 24 too. I also could have done 4 years for my spouse. So that would have I don't know if it would have made a huge difference. I just would have felt better having that money in a tax-free account versus a taxable account in hindsight.
When you're 22, though, you never think you need the long-term account, don't you?
Well, it's like, I might be dead at 30. I mean, 65's eons away.
How many young people make that mistake? 22 years old, 24 years old, 25 years old. I don't need a retirement account. I only have a couple thousand. I just got to put everything in my trading account, right?
Well, and there's literally no downside with a Roth. You can take it out if you want later. Like, it's just get it in there. And if you want to take it out later, fine. There's no penalty on the contribution.
I mean, just to kind of go on the importance of that conversation, guys, let's say you start with an account at $2,000, right? And you're putting nothing into your account, right? And all you're doing is saving that money. Like you were talking about, Ty, and you're not investing it. You're not compounding it. You're not doing anything that, it takes to build wealth. Well, after 12 months, you still have $2,000, but you might have $2,000, but you don't have even $2,000 worth of buying power. But if you start contributing even $50, not negative 50, that would be terrible. But if you even contribute just $50, and then you compound just 2% monthly.
Your computer wants to click negative.
Oh, it wants to go negative
Yeah.
so bad. It wants to not prove my point. There it is. But if you in that same time frame, if all you did was, put $50 of your money on a monthly basis into that IRA, get 2%, cash flow, taking into account dividend, growth, cash flow, whatever you do, all of a sudden at the end of the year, you have $3,200. And if you do that over that same, what would you say? You said you were saving for 6 years?
I missed out on 7 years.
7 years.
Yep.
So 7 years would be 84 months here. 84 months. Oh my goodness. It hates my monthly contribution there. But over just a $50, all of a sudden you have $21,000 that you have grown off that $2,000 investment by putting $50 in it and then compounding, 2% monthly returns. Money grows to tremendous levels, even starting from a small point, right? And so and I'm not showing anything like, oh, I want you to go put $1,000 a month into savings every single month. No, you're just putting $50. And let's say you make $50 in cash flow off covered calls off those. And now you're putting in 50, you're compounding another 50 from cash flow. All of a sudden, again, it does not like that. But all of a sudden now you have not $50. Again, we got to go to the $100 here. But all of a sudden, Tyler, it does not want to go to $100, but you have about $32,000.
Jonathan made a good joke. He said, "Pal has control of your contribution."
I missed the thread. I got to get on the thread.
That is hilarious.
That's well done. Yes, the negative 50 is when you take into account central bank monetary policy. Right?
Sure, you got to fight the inflation.
Yeah, that's that. But again, the point remains. Just a small amount of money, even when you're young, a small amount of money over time can grow into something substantial. I absolutely love that one. Em, I want to go to you. You've been trading now for about 6 years, Em. You see something, you take it, right? You're the queen of everything. What is one piece of advice you can go back to March of 2015 and say, and it can't be, I should have chose Matt as my mentor, but it can't be that. But what is that one piece of advice? Oh, I got jokes today. What is that one piece of advice you would give your younger self?
I would say slow it down a little bit. The markets are going to be here for a long time. No. I would say slow it down just a little bit. The markets are not going anywhere. Spend time getting educated, understand the risk that comes with trading. Follow your rules and just be patient with yourself. Don't try to force it, just take it one bite at a time and be patient with yourself and just don't rush it.
I like it. How many of you guys felt when you were young that you rushed it?
Oh, I definitely did.
I rushed it so much. I was learning to invest in real estate and stocks simultaneously. So
good luck with that one, Greg.
I rushed it a little bit. So
I know for a fact, I think all of us rushed it because that's what we want to do when we're young, right? We're no different than everybody else. We want to rush it. We want to see that. And then we do it for a time period. We're like, yeah, it's not as easy as it's shown on TV to a certain extent, right? Yeah. So slow it down, Em. Have some perspective. Would that be the advice?
Yes, absolutely.
All right, I like it. Cody, what's one advice you'd give your younger self?
So mine is along the same lines as Coach Emily. Is that slow it down. The reason why is trying to double your account, triple your account, or try to make $1,000 in like a week or a month, and you're just rushing and trying to get those quick gains that get rich quick. That's the fastest way to actually blow up your account. And now you're starting at a worse level than you started with. If you slow it down and let the process work itself out, you're going to see the gains. If you try to rush it and spike those gains, you have a greater chance of blowing up your account and ending up with zero than you are at any of those gains that you're seeing in your mind.
I like it, Cody. Tim, what about you? I mean, you've taught as many people as I've known anybody in the market over the last 10 years. Yeah. I'm sure you get these questions all the time as an educator, right? Yeah. What are some of the mistakes you made? But what's that one piece of advice that you would give yourself 15 years ago?
No matter what, the first bit of advice I would give everybody all the time is to start. Don't worry about how much money you have. Don't worry if you're going to get it. Don't worry how long it's going to take. Trust the process, but you got to start the process. If you don't ever actually open the account, you put your name, your social security, your address in there, you open a brokerage account. Now, boom, all of a sudden you can have access to the financial markets. Too many times I think people are just intimidated about, oh, I'm going to have to learn the software, or maybe I'm not going to be good at it, or whatever it is. So the advice I give everybody else out there is to start. Now, I had no problem with that. I was a young person who was willing to start and try anything. So for me personally, that wasn't one of the things I learned from. So if I was giving myself advice, it's do not over leverage. Period. That is the number one thing I'd tell myself. Do not spend too much money on one trade. Don't just go pop call options because they're leveraged and you want to play Amazon or Apple and you only got a small account. You don't have to do those things just because some Reddit thread has some kid crowing about how much money he makes, or some Twitter, nerd is talking about how easy the market is, or whatever it might be, And I think right now in 2020, by the way, we are seeing that situation with young people, new traders, not just young people, all traders, where it looks easy because some people on social media are saying, well, look, I took 10 grand, turned it to 100 grand. What we're now seeing, Matt, is the thing every veteran knows. Well, a lot of those accounts are now blown up, right? So for everybody else out there, start no matter what. Number two, though, do not over leverage. That would be the advice I'd give.
And never go to Wall Street bets, Nick.
Dude.
I think we can all agree with that one. Do not go to Reddit. I'm not even going to say it because it's so insane out there. But I love the point there, Nick. No doubt about that. Tim, thank you so much for the insight.
Don't go to those.
Do you guys think, because we've seen some horror stories recently about margin, guys. I mean, like literally some really, really sad stories about people not being able to understand how margin works, getting access to margin that they didn't even know they had, didn't know what it was, not even knowing how to read a broker's statement to understand the risk associated with using the margin. Do you feel like the brokers have done a disservice to the next generation by allowing so much margin on such low experience?
If I can interject on that one, it's always been the buyer beware when it came to the markets, and I think that goes for not only if you're investing yourself, but even if you're putting your money with someone else to invest it. It's always been buyer beware. I think that's a terrible way to introduce people into things. I know that there's been some new players in the game, from a broker standpoint, as of late. And I feel that, there should be kind of just at least a basic level understanding, when you open an account, say, okay, you at least got to know this much, you know what I mean? Because we've heard some terrible, and I mean, like life-changing stories about, people using margin. And the reality is, even when I started, I didn't really, I knew what the word meant, but I really didn't understand it until I started, like Tim said, getting a little over leveraged. Then you get a phone call from your broker, and you don't get phone calls anymore. They just do stuff now. But back in the day, they actually give you a call and say, yeah, we're going to need some more cash. We're going to close your positions. That is the second worst phone call to get, as far as I'm concerned.
Oh my goodness,
it's
insane. Or the random Saturday email when your option's 1 penny in the money and the broker sends you an email. You owe us $14,000. Like, no, that's not how it works.
Is the Greg, real quick, is the worst phone call to get that Justin Trudeau just won his second term? Is that?
We're not going down that road right now. We are not.
He already got his second term. I'm worried about a third and a fourth term, bud.
Listen, that's King Trudeau for you, Mr. Old Money Holmes. That's King Trudeau. In talking about the margin, because I really want to talk about this, because I do see this as the lack of understanding margins, and leveraging options, futures, and Forex is one of the reasons why we do see those horror stories from that next generation of new traders. And why they never maintain is because they just don't understand what margin is. I mean, guys, Noah, you've taught, new traders for a very, very long time. Tim, you've taught a lot of new traders. I know I have as well. And I when I would talk about margin, And I would talk about it in the sense that where you can get 2-to-1 margin on standard margin, you have portfolio margin, and we weren't even talking about leverage. But the question I always got is, well, who's putting in that money? Who's putting in that money? Why do I only have to do this? Why do I only have to do that? It really is a confusing subject for new traders. It just is.
Yeah.
And that confusion can lead to some of those horror stories. What are some of the things that people should really take into account before they start utilizing margin? I want to go to Coach Noah.
Oh,
Let's say your son, 12, when's he going to start trading? When he's like 12?
oh, sure. We'll keep him out of the markets.
Okay, when your pre-teenager starts trading and Robinhood offers them 14,000 to 1 margin, what would you say to him?
Well, you got to remember, son, that they let you borrow their money, but they don't let you lose it. They'll let you lose your money, but not their money. They'll give you enough rope to hang yourself with is really the problem with over leverage and what some of the brokers do offer. And the temptation is real because people really do want to get rich quickly. So, learn to trade with your own money. Even if you have a margin account, treat it like it was a cash account. Stick your toe in the water first and really understand your risk. You can trade anything you want as long as you understand the risk. And I really want to, echo and reiterate what Tim was saying. You've got to be really, really careful with margin and position size. Like, don't over leverage. It cuts both ways.
In terms of like Dylan says, and Dylan, thanks for being here. We're glad to have you. We love new traders here because the only way to turn a new trader into a veteran trader is to teach them the right way to do it. Right. Mm-hmm. And Dylan, so welcome out. And Team Tackle, let's give Dylan some love. Welcome out, Dylan. But Dylan says, new trader, kind of scared to be margin. I think that's a good thing. I think that is an absolute good thing that you should fear margin, because if you don't, you will disrespect margin. And the moment you disrespect margin, margin is going to come bite you in the butt. So at what point do you guys think that new traders should feel confident enough to utilize margin? Because let's face reality, guys, I know every single one of you use margin.
Well,
every single one of you do.
I would say you start small, Matt. Like you start out, okay, pretend like it's just a cash account. Then once you get more comfortable and confident, and you really know your system, entry, exits, and risk, then you can move to like 2-to-1 leverage, and then you can work your way up into options. Don't start out day trading futures, like that type of thing. That's probably ill-conceived. But you work your way up and understand where your comfort level is. And really, it's kind of one of those know thyself. Like don't just go swinging for the fences, because you will strike out.
Tyler, you've been trading since you were 21. You've been in this field for a bit. I mean, you were born to do this, Tyler. You've taught a ton of people how to do it the right way. When you get asked that question, at what point should I start using margin? Like Dylan, at what advice would you give to Dylan? New trader, young trader, getting out, a little scared of margin. What advice would you give to Dylan regarding when they should start looking at margin?
Well, I would say if you're not successful trading without margin, you're not going to be successful trading with margin. You're just accentuating everything. So I would say if you're confident and comfortable and you build a good track record trading with cash, and specifically what we're talking about is you put $5,000 in an account, don't buy more than $5,000 worth of stock, for example, right? Mm-hmm. So don't use borrowed money to trade. If you can do that successfully, then you can start to say, all right, well, I've got a good system. I just wish I had a little more capital available to me so I could have leverage and make money a little quicker. But you got to make sure you're doing it okay with cash first, because you can't, if you suck trading $5,000 cash, going from 5,000 to 10,000 isn't going to magically change anything. You're just going to lose money faster. So I think it would be just developing a good track record and a confidence level in a non-leveraged way first. And then once you have that, I think I would be more confident going to leverage because I've got the track record.
Yeah, I like that. What about you, Coach M? Margin has been such a hot topic over the last couple of years, especially, amongst that, next generation with those, online apps like Robinhood And we know how Robinhood markets, guys. It's one of the reasons I disagree so much with Robinhood, is because I feel like they're predatory marketing is what I kind of feel. And they misrepresent margin. But you can go to a Robinhood account and get massive margin without experience. With that type of rise in philosophy, it's obviously a bigger risk for that. What advice do you give to people in your own life who are interested in trading? They look at these types of accounts like Robinhood, who make, trading seem like a game, like it's not real. And the marketing is, you're not even trading your money. I mean, what advice would you give?
Oh, well, it's a good question, because I actually just helped a friend of mine open up their first trading account over the weekend. And we were talking about, that process of filling out the questions and what kind of account do you want? Do you want an individual account, a margin account? And, luckily for her, she has somebody who's experienced in the market that can walk them through that and explain the different types of accounts that you're opening. But for those people that don't necessarily have that information or know what they're doing, understand what margin is. And I explained to her, I said, listen, you're going to open up a margin account, but whatever amount you're going to deposit in there, that's all you're going to use to trade. You're not going to borrow the broker's margin to trade until you get good with the capital that you're depositing in that account. Kind of like to what Tyler said, use that capital, but don't go borrowing money that you don't know what you're doing with. You need to understand stocks and options and margins and how all those things work, and take it one step at a time. Again, don't try to force it. Don't rush into it. The markets are going to be here 10 years from now, 5 years from now. So just take it slow.
I like it. What about you, Cody? Cody, you're kind of in that generation of that new traders. I know you kind of started trading when you were very young, but you got a lot of friends that have started to ask you specifically about trading, how to get started. What do you recommend to them in terms of, how to navigate that margin conversation?
When they first start about margin, I go back to the mind setting. It's like, okay, well, why are you looking at margin? And the first thing I actually want to do is I really want to make sure they understand A, how the market really works, B, how their platform works, because I've had people wanting to move to margin and they're still trying to figure out think or swim. And it's like, if you can't even know where to click to put your order in, you don't need to be on margin. I don't need to be handing, a stick of dynamite to someone that's wants to play with fire. Not going to do that, because that's a very easy way to take your account to zero very fast. So if you want to look at margin and you want to grow your account faster, you have to go through the steps and through the process. And most of the coaches have outlined that here so far. But there are steps to get to. Is we all want to get to that point where we see the account grow, and we all want to see the account grow fast. But there are steps that you have to look at before you get to that point. You can take a small account and grow it. And this is where you look at percentages over actual dollar amounts, and we'll get to that later. But don't worry about trying to add leverage to it until you figured out, how do stocks move? How do you read a candlestick chart? How do you understand your own brokerage platform to actually place these trades? How do you read these statements? If you don't know the answers to all those questions, then you don't need to be touching margin, because that's just them allowing you to trade with more money for the simple knowledge that most traders are on that tug of war between fear and greed. And Wall Street knows that if they can keep you on one of those sides, then they can take money away from you. Yeah. They know that if they give you extra money, as Noah said, enough rope to hang yourself with, then you're going to do so. So you have the professionals and the scam artists out there, saying, hey, buy this real quick. Hey, it's about to pop. Hey, Robinhood, all these different things that they're telling you to use margin to scale out, and they're just pulling that money away from you. So if you don't understand all these other check boxes first, just stay away. Once you feel that you've understood that, that's when you dip your toe in the water. You say, okay, let me go to margin, but I'm still going to pretend that I don't have margin. And let me see how that adjusts to my account. And you just slowly dip your toe in the water. Don't go cannonball into the pool. Wade slowly through the steps. And that's the way I would suggest to do it, is if you don't understand the basics of just what a swing trade is, what a long-term investment is, what dividends are, what stock splits are, how to read your statements, then you need to slow down.
Would you agree with this, guys? If you cannot describe what margin is, the different types of margin, and the risk associated with margin to your mother, you shouldn't use margin.
Oh yeah, if you can't explain it to your parents, if you can't explain it to your friends, then yeah, don't touch it.
Well, and I was picking my mother is who I was picking, because I've seen Tim try to get her to open up an account before. So like, that's how important that discussion is. And we've just seen it, but I do want to shift a little bit because, you know, one of the things that a lot of new traders just struggle with is the administration type things you have to do. And that goes into the different types of accounts, how to allocate money in those different types of accounts, what type of broker to use, what type of trader you are. And I put this all into the trader psychology, the trader personality, but I want to talk about the different types of accounts because, you know, that's one of the biggest questions for a lot of new traders and new investors is, okay, I'm with you. I want to start, you know, planning on my retirement. We have all these types of accounts, 529 for kids. We have, you know, all the different types of IRAs, traditional, Roth, SEP IRAs. You have, you know, all these different, you know, thousands of different 401ks because they're all company sponsored and company regulated. I mean, it becomes really, really, really overwhelming when you go to the 3 numbered sequence accounts, right? What is a 403B? What is a 401k? What is a 529? What is an IRA? What are all these different types of accounts? So I wanted to talk a little bit about the types of accounts. And guys, I want everybody to understand something very, very quickly before we have this conversation. There is not a one size fits all here. It is very, very unique to the needs of the individual. If I was looking at person A versus person B, and person A had, you know, $20,000 in a, you know, traditional IRA at the age of 28, and person B had $575,000 in a traditional IRA at the age of 56, my answer would be very, very, very different to those. I want to start with Coach Greg. Greg, before you were the old money homes, right? Before you were that killer trader, that killer investor, compounding dividend, Greg, a lot of people might not know this, but you actually had a fairly traditional financial, resume, correct? I mean, you were basically hawking, you know, funds up there in Canada. So talk to us a little bit about, you know, when you get those types of questions, Greg, what is it that you recommend? Let's first start with retirement accounts, okay? Because can we all agree that everybody should have an active trading account and a retirement account?
100%. 100%.
Okay. So we all agree on that. It's good that we can all agree. So we all agree that you should have both accounts, but you don't have to start them simultaneously, right? You can piecemeal, kind of like what Coach M said. Take your time, have some perspective. Greg, how would you describe the difference between an IRA, and a traditional IRA, and a Roth IRA?
Okay, so I'm gonna have to put this in terms of a Canadian
term. Yeah, we speak Canada.
All right, well, that's good. Hopefully everybody in YouTube land does as well.
I'm not sure we speak Quebec, but we do speak Canada.
I don't speak that either, so that's okay. So basically you've got different types of accounts. So the Roth IRA, as I understand it, is kind of like our tax-free savings account in Canada. So yes. Basically you've got an account where you can grow it to a certain amount. You have a limit you can put in, you can grow it to a certain amount, and you can take it out tax-free at some point in the future. Traditional IRA, and 401ks, I think they're kind of a blend of what I would call a registered retirement savings plan, or RSP in Canada. And so they're a taxable account that gives you tax deferred growth, I believe is kind of how that works. Again, I'm not too well versed on the American
It's very similar, Greg. You're on board.
It's close. So I was a financial advisor, so I spent a lot of time before I started trading. I spent a lot of time helping people open these types of accounts. And so the reality is I think it's very wise, even if you're brand new and you don't have a lot of money. You know, I originally talked about planning, you know, your path, if you will. Look at your path. Say, okay, do I have that long-term perspective? Am I looking at my retirement right now? Am I looking just because I want to start trading and you know, start doing some quicker, shorter term perspective stuff? I think you can do both, right? If you just took a sheet of paper and you put a fork on there, right? You say, okay, this is my retirement plan and this is my trading plan, and I've got $2,000. Well, then you can separate that and you say, okay, well, maybe I start with 500 to 1,000 in my long-term account, and then the rest in the trading account. And then you break it down and say, okay, well, what's my goal? Well, maybe my goal is to make 10% a year on my account for the next 30 years, and that's my retirement taken care of. Well, then you can start to, once you get some education and you get involved with folks like us and communities like ours, you can go there and you can sit down and you can say, okay, how do I achieve those results? And it's a basic planning exercise to say, okay, well, if I need to make 10% a year, how can I do that? Well, I can buy a dividend paying stock, I can sell covered calls, et cetera, et cetera. It's once you learn, once you get that knowledge, once you get that experience, it's easy to do that. You can actually do that from the start. Okay, but you have to make a decision and you have to say, okay, which way do I want to go, or how do I want to separate this out? And so that might be a daunting decision for folks. Let me tell you, it doesn't matter either way how you break it down. It's just like Tim said, just start. Just start down, even if you go down both paths simultaneously, because they do actually have similar traits to both, right? So, all you got to do is kind of set yourself up and say, what do I want to achieve at the end? Okay. So if the end is 30 years down the road, you can say, okay, I want X number of dollars in my, Roth IRA or my, traditional 401k, whatever the case may be. If I want that there, then I put a dollar figure to that and I say, okay, now I reverse engineer it back to this. Now, if I want to trade, I can say, okay, well, maybe I'm a position trader. I'm going to hold trades for, 2 weeks to 6 weeks to a couple of months, whatever. Then I can say, okay, well, I want to make X number of dollars per month. And you can back engineer all those. And the different types of accounts are going to help you do those things, right? With the Roth IRAs and the IRAs, the 401ks, you're going to probably gravitate more to that retirement space. Whereas if you have an individual margin account, that's probably going to be your trading account for the most part. Okay. And so as long as you start to learn the differences between those accounts, and they're really not, it's like I said, it's not this daunting task that everybody thinks it is. It just helps if you got somebody to talk to. We answer these questions all the time, in the clubhouse and things like that. People ask me all the time. I've actually set up videos for tackle trading, just talking about different account types, right? So you can get online, you can get in the website, and you can watch these videos and learn so much very quickly, and then you can make your plan. And that's, I really can't stress this enough. When you're brand new, sit down and make a plan, because believe me, it's going to take so much stress off of you. You know what I mean? That we had the margin conversation there. And before you ever use margin, one of my mentors used to tell me, you need two things. You need proof of concept and you need organic growth. Okay, those two things stuck with me. Proof of concept is proof that you can trade and do it successfully. So I don't care if you buy one share of a $5 stock and trade it, and you do it 100 times in a row, and you win on 75 out of 100 trades. That's proof of concept that you can do this, right? And then organic growth is where you put a certain amount of money in an account, and then you see it grow. You actually see the equity curve go up. That's when you can start to introduce things like margin and things like, other things of that nature. Whereas with your retirement accounts, you're probably not going to have that. At least I know in Canada, you don't have that.
We don't have margin. But shouldn't that tell you the risk associated with using margin when it's literally illegal to use margin in a retirement account?
100%. And we have, like I said, here in Canada, we have the same thing. We have, for every individual type margin account we probably have 10 different types of retirement accounts, right? And they're all, you can only trade certain things in them. You can only have cash in most of them. Like, there is no leverage in them. Now you can do a couple option strategies, but the reality is they look at it in a certain manner that they want you to take as little risk as possible. So that's actually not a bad place for people to start too, because then you don't get that margin there, and you can still learn that proof of concept. You can start to see how these things actually work, and you can make it work for yourself in that manner. So
yeah, and just to put it in American speak here, basically you have pre-tax, post-tax, right? And so guys, the government's going to get their cut one way or the other. Okay, you can't hide from taxes. They're going to get it, but you can be creative here. first and foremost, you don't have to pick one. You can do both. Okay.
Yep.
But just to simply understand what Greg was talking about, pre-taxed accounts means the money you're putting into that account, circa a traditional IRA or a 401k, the money has not been taxed. What that means is when you start taking distributions post 59 and a half, those distributions will be taxed. Now, the reason the system is established that way is once you retire, your earned income is supposed to go down to such a small number, meaning, i.e., your lifestyle also goes down to such a small number that that taxable event on your distributions is not going to be that painful. I just don't agree with that philosophy, just that life philosophy. Let me work my entire life so I can not live a fantastic retirement account. But that's what a traditional pre-taxed IRA or a 401k is. A Roth IRA is what we call a post-tax account, where you're basically, the money you're putting into it has already went through a taxable event. And because it's already went through a taxable event, that government has already got the cut, so they can grow tax-free. It really depends. My favorite retirement account is a solo 401k. Tim, what's your favorite retirement account very quickly?
The solo 401k is great if you've got a business. It is my personal favorite.
This is America. It's not hard to start a business.
No, it's not.
Start a trading business, start a 401k, provide yourself a 401k.
So many advantages for a lot of young people who maybe can't pay the even annual fee for it to keep it up, a Roth IRA. But the solo 401k,
especially when you're first starting,
yeah,
right, and your contribution limits when you're first starting, I think in a Roth, and those change, but you have limitations in a Roth and a traditional from a contribution perspective.
Yep.
So a Roth IRA. And if anybody disagrees, obviously just point it out. But a Roth IRA, to answer that question, Em, that you had, and I can't remember who asked the question, but they asked, guys, for investment retirement accounts for people that are in the 20 to 30-year-old bracket, what do you recommend, a Roth or a traditional? For me, when you're 25 and you're starting an investing career, that money, especially compounded, can grow to substantial levels by the time of a retirement account. And so for me, a Roth IRA is far superior than a traditional IRA or even a 401k if you're in that demographic. Would you guys agree with that?
Yes,
I would.
Yeah, I would say max out your Roth IRA.
Max it out. Yeah.
You can only put so much in per year to your Roth IRA.
Yeah.
So after you hit that max out limit, then you can look to put in other places. Because after that year passes, you can't back put in that Roth IRA. So you max out your Roth IRA and then you look for the next thing. That's one.
And I can just speak from my personal experience, but most traditional IRAs I've come across, those were all converted from a former 401k that was orphaned, right? And I'm sure you guys have a lot of experience there as well. And I'm not sure, how many of you guys have actually converted a 401k to a traditional IRA?
I converted my wife's.
I did.
Yep, I've done it.
Now, I want to ask you guys a very simple question. Okay, Emily, I knew you did, and I wanted to bring you in. Emily, did it take you longer to make the decision than it did to actually do it?
It was very easy to do it. Yeah, it took me longer to think about what to do with it than to actually do it. It's a call to your broker and having it done within a matter of minutes.
Like literally, you call your broker, the broker handles it for you. You took 5 minutes, and now you have freedom of do whatever you want. Correct?
Yeah, pretty much.
Now, and very quickly on this retirement account is very important. When you convert an old 401k that has been orphaned, okay, and you pull that money, you put it into a Roth, that is a taxable event. The same way that if you put it into your personal savings account, that is a taxable event, which means if you convert it to a Roth, if you convert it to a traditional 401k to traditional, both of those accounts are what are known as pre-taxed accounts, which means you're not actually taking the money. There is no taxable event. So the number one reason people have traditional retirement account, traditional IRAs, is they had an old 401k that they typically are no longer working for. Now it's orphaned. They immediately convert that to a Roth, or excuse me, a traditional. And now you have access to do whatever you want with the money and don't have the restrictions and regulations that you did under the old 401k plan. But for the most part, new people setting up their own retirement account, which is becoming more and more in America as we've fully embraced the contractor versus employee type agreement between corporations and consumers. It's more important in the future. Understand that very important distinction of pre-taxed versus post-taxed accounts. Now, when you're first new to trading, and we'll come back to retirement accounts, guys. And if you have any questions, obviously we'll stick after. But I do want to move forward a little bit in terms of another thing that new traders really struggle with. And I want to get Coach Frank, Coach Tyler, and Coach Noah's take on this one. Guys, I'm talking about the time frames of traders. And I'm talking about specifically how long did it take you guys to know who you are as a trader? So let's start with Coach Frank here. Frankie, come on in.
What's up?
How you doing, Frank?
That's doing good. Enjoying hanging out. And that's a tough question, and I was slower than most people.
Yeah.
So I don't know if I'm the what you should be aspiring to be. It took me a few years, honestly. I always say, it's the hat you're wearing. Right? We can all have multiple hats, but you can only wear one at a time. And so was I a day trader? Did I only trade OIH, the oil holders ETF back in the day? Was I just going to do credit spreads? Oh, heaven help you when I found out about call ratio back spreads.
We all tried that one.
Oh my goodness. I was very, I learned a lesson.
There's a reason I have an opinion on people who push out call ratio back spreads.
Yeah. Well, I just assumed that there was no way it couldn't work out, and it can be a good strategy, but it's certainly not the only thing I would recommend doing.
Oh no, it couldn't be anything about me not being a great trader. It couldn't have been that, right? No, I had to go blame somebody else on that one. But Frankie, you said it took you a couple of years to really kind of figure out. I'm sure you've dabbled in day trading, swing trading, position trading, investing. You've done it all, Frankie. But you know exactly who you are, and Tackle Trading knows exactly who you are. You're the breakout king.
Yep, I'm the breakout guy.
What was it? I mean, and I know you've back tested, you've geeked out with Coach Mark so many times. I mean, I'm sure your teeth hurt.
It's true.
So in terms of that, how long did it take you? And what was it about the breakout that you just found that fits your personal trading philosophy and personality?
Well, my goal was basically to find something that was repeatable, right? Something that was very easy for me to say, this is the same as that, right? And breakouts, in my humble opinion, are the easiest thing to do that on, right? There's a clear level of resistance or there isn't. And so I can develop clear rules, what defines a break of resistance on a high base, on a cup and handle, on a traditional breakout. And so the big part of it for me was, one, it made the most sense. Psychologically, everybody knows it's resistance. Nobody should be buying there. Big money has to come in and buy there because dudes like me aren't buying at resistance, right? Dudes like you, big money's coming in. So the psychology made sense. Any bears would have their stop loss right above that resistance. So between the repeatability and the kind of the psychology, at least in my personal opinion, the way I view breakouts, that really what kind of brought me to the dance with the breakouts, I guess. And they can run,
how many trades, how many time frame was years, but we're talking hundreds of trades, Frankie, before you figured out
it took a while.
Exactly who I am.
Yeah. And life's better when you do, when you know who you are as a trader and what you want. I mean, I work with a lot of new traders, right? I have the pleasure of meeting most of the new members of our team. I get to sit down and talk with them. And, when they're new, I always tell them, it seems like everybody's doing everything but you, right? Everybody's trading futures and Bitcoin and day trading Forex. And
can we dispel that nonsense? No, they're not.
No, they're not. It feels that way. It does. It absolutely feels that way, but it's not true. We all kind of have the things that we like to do. And I like to think we like to do the things that we're just naturally better at than the things that maybe we're not so good at. Right. So that's really kind of the way that I look at trading as a whole. My goal when I work with people is to get them to do something they can do on a different ticker symbol at a different price next week, next month, next year, that works, that they've proven to themselves that works, whether it's a breakout or not. Hey, I'm biased. I think that's where you should all go, right? So come join me on the breakout bandwagon. But it did take a while, but I'll tell you what, when you accept who you are, right? And this isn't true just in trading. I think this is true in life. When you know who you are, it's just easier to do your thing. And it definitely rings true, in my opinion, in trading.
Yeah, love it, love it. No, I know you've tried everything, right? I mean, you're the scientist. That's your new nickname. You're the scientist. You try.
Can we throw the word mad in front of that?
You're the mad scientist. You get into your laboratory and you just start trying to map out probability and scale and you name it. How long did it take you? I mean, to truly figure out exactly what your personality is towards the market?
Well, personality I think it's hard for people to actually dial in. It's an interesting thing, like just getting people to identify something like a pain threshold, like an honest pain threshold, where they're, position sizing, and it's never really as big as people think in my experience, where, they say, oh yeah, I'm willing to risk, $500 per trade or whatever their number is. And in reality, they start getting squeamish, after $50 or $100. And they haven't even established that initial threshold. It can take a while. There's always a process of self-discovery involved, in my opinion. Learning how to trade and invest has led me down all kinds of crazy rabbit holes and paths, just curiosity, just trying to figure out how that works. Is that something I could do? And then just a ton of trial and error. Starting out in a virtual account will allow you to practice and experiment without having to risk real money. And it's a good way to get your skill set built while you're still in that self-discovery phase without going and blowing up an account or anything like that.
I like it. What about you, Tyler?
The only thing I'd add is don't feel like, I would echo what Tim said. Just getting started is the important thing. I started as a swing trader just because that's what the person who was teaching me was teaching at the time. And you don't have to wait until you know everything to get started, and you will evolve over time. You don't know what you don't know. I think you just explore a variety of different things and realize that if you're not successful with the first thing you try, it doesn't mean trading doesn't work. There's a million different ways you can trade and invest, and you have to be patient and be willing to kind of play in the sandbox a little bit till you figure things out. And people who are too aggressive, they get too leveraged, they never get to the point where they figure out what works for them because they blow up too quick. They just didn't let the process work. So I don't know that I would worry too much about nailing down what's going to work for you immediately. I think you just get in there, Matt. And I think through trial and error, you gravitate towards the things that you find success with. And that's kind of where I've gotten to where I'm at is it just, I stopped doing the things that don't work and I keep doing the things that do work. And pretty soon you got.
And Matt, I got something to add here if I could. Please.
Yeah, go ahead, Cody.
I love, there's a metaphor Tony Robbins uses a lot. And he always talks about, how many times you tried this? And people are like, well, I tried everything. It's like, okay, well, what all did you try? It's like, maybe I tried 100 things. Well, okay, we'll name them. Okay, maybe I tried these 2 things, they didn't work, and then I gave up. And then he always says, how often would you give your toddler the chances to try to learn to walk before you finally just say, you're just not a walker? And every parent would golf at that. And they're like, no, my child's going to keep trying to walk until they learn how to walk. And that's why everyone walks. And it's the same thing with trading. Just because you try one strategy and it doesn't work for you, that doesn't mean you can't become a trader. You need to realize that different strategies work for different people. Different methods within the market work for different people. And you have to find that fits you. We're all different and unique because we found the things that work for us. The only way to truly fail in the market is, well, A, to give up and completely blow up your account because you over-leveraged and got greedy. And B, just to give up entirely.
We got unemployment checks coming. We can always open up a new account.
Yeah, I've actually blown up accounts. You can start over. Like you can. It can be done. Yeah. Okay.
It can be done. So
listen, you're not a real trader until you've blown up at least one account.
All right. But the only way to really fail as a trader is to give up. That's the only way to really fail as a trader, because all you have to do is keep trying, keep learning. if you did blow up an account, what did you learn from the mistake? If you keep repeating the same mistake over and over and say, well, this.
All right, let's put the coaches on the hot seat here. All right, you guys love it when I do this, meaning you absolutely hate everything about me right now. Who has blown up an account in their history? Raise your hand.
Oh yeah.
Hang on, hold down your screen so we can all see us raising our hands.
You can't see my hand, but it's up.
Yeah.
You can't see mine, but it's up as well.
Yeah, I've blown up too.
What was the mistake that led to that account being blown up? Because it was, I'm willing to bet it was all within our first year of trading.
Yep.
Right. It was, and we were just kind of down, but let's go down the list. Let's go Tim, Greg, Tyler, Noah, Am, Cody, Frank, then me. What was the reason you blew up your account?
I thought I was a better trader than I was. Is simply the first answer I would give you. It was over leverage. I had been on a hot streak. You know, one of the biggest, risks that can happen to a new trader who really doesn't understand leverage, margin, position sizing, all of that kind of stuff is winning too much, because you get this false sense of security and confidence that you're really good at this and that all these gains, I must be a rock star, Frank. I mean, I must be a rock star.
In our first year of trading, we're all Jesse Livermore.
Yeah.
All of us are.
I mean, look at the money rain, right? And so you start pushing it and putting your foot on the pedal. And I just simply got over leveraged. And then when I started losing on that first account that I blew up, what ended up happening is I doubled up to catch up. You guys know that bad mistake people do. You start putting tilt. Yeah, you go on tilt, completely off the rails, emotional, and then just absolutely blew that first one up.
I agree. And Skyla, to answer your question, if you have to ask the question, you've never blown up an account because it's obvious.
Yeah, I was just typing that out, so you saved me some letters.
Okay. It's when you go up into the mountains and spend a week by yourself getting back in tune with who you are as a human being, and you've questioned everything about your life. That's when you know you've blown up an account, when your entire life is upside down. So you haven't blown up an account. That's very good so far, Skylar. What about you, Greg? Tim over leveraged, got overconfident, thought he was Jesse Livermore reincarnated.
Mm-hmm.
I was the exact opposite to Tim. I got a beat down first day, basically. Over leveraged, obviously, but mine was the revenge trade that got me. The revenge trade. I took a beat down, and I thought, you know what? I don't put up with that. I'm a rugby player. I don't put up with that. I thought I'll get it back.
So Greg, let me just picture this. You got big, right?
Oh yeah.
You got big. Like you got big. Chest puffed out, shoulders raised. I mean, you were going into attack mode, right? And it's like, wait a second, it's digital. How do I go in attack mode? Explain the revenge trade.
More contracts. Well, so a revenge trade is, it's funny. Let's say you get a beat down, you trade Tesla. Okay. You do some kind of crazy option strategy on Tesla and you drop $1,000, right? Well, you think, you know what? I got to get it back on Tesla. You know what I mean? There's no way they could take my money. There's no way they can get away with this, right? So then you go and you look in the chart and you try and find another trade. Well, you're already, as you guys said, on tilt, and your perspective probably isn't as sharp as it should be. Next thing you know, you double down. You know what I mean? Kind of martingaling type stuff. You double down. Well, then guess what? The next trade comes and it smacks you too, and eventually your account balance goes down to maybe not zero, but close enough to zero that it doesn't matter anymore. And then you go up.
The revenge trade is one of the reasons why you blow up an account and question your entire life.
Well, you don't go to the mountains of Utah, but you go and play hockey with your buddies, and you get very aggressive with the cross-checking. So
you kneecap somebody.
And that's why they don't let Greg in the league anymore.
Yeah.
I'll just tell you something, guys. Everybody at Tackle knows I don't trade banks. There's a reason for that. I tried to get my revenge on Goldman Sachs one time, and Goldman Sachs had a couple things to say about that. We'll just leave it at that. And I have yet to try to get my revenge back on Goldman, because I'm like, you guys got more money than me. I'm out. Okay, I like that one. I like that one a lot. Noah, what led to you blowing up your account?
Oh, I've blown up 2 accounts, Matt. And one was very similar to what you just saw happen on Kodak. Like crazy hot stock tips. Stock went through the roof. I got caught up in the excitement, enthusiasm of getting rich quick, bought just in time for it to reverse and drop back down to nothing. So that was exciting.
You bought the high?
Not the high, but high enough.
Pretty high.
And I
you
went
bought
all
the
in.
299 tick on Tilray. Okay.
And I went all in. And that was the fastest money I've ever lost.
Hey,
Dude, Matt,
can I just
somebody
say one
out there.
thing, guys? Can I just say one thing?
Yep.
I was in a conversation literally about 45 minutes. It was a business conversation, but I was in a conversation about 45 minutes before we got on the show here today. And somebody asked me a question in that business meeting because it was regarding a partnership that I'm thinking about with Tackle. And somebody asked me, they were talking about our YouTube, and they're like, "Hey, do you delete some of your videos?" I'm like, "What do you mean?" And like, "Do you delete some videos?" I'm like, I honestly, I was curious. I was like, "I don't know what you mean by deleting. Why would I ever delete videos?" Like, well, what if your analysis was really bad? And I ended the meeting because I was like, what are you talking about? We're not shy about the mistakes we've made. We all make mistakes. We stand by. We're real people. We make mistakes. We've lost money. We've blown up accounts. We've just came through all of that. And so same conversation, listen to you guys, to know each and every one of your individual journeys the way I do, to know where you started, to see where you've grown into. I think it's very, very important for people to listen to that, because there's a lot of people that are going to go through that moment this year, in my opinion, or it might be next year. But there is that pot of gold at the end of the rainbow if you can stick with it, if you can learn from those failures. We should never, ever, ever fear failing, ladies and gentlemen, ever, because the moment we give into that fear, the moment we stop growing as human beings. Never fear making mistakes. Just learn from them, grow from them, so you don't blow up a third account, right? And no, you never blew up that third account.
Well, hey, third time's the charm, right? And
he is an overachiever.
It's one of the reasons, Matt, I don't count my, starting trading in 1998, because I didn't learn anything. I hadn't been educated. I hadn't learned anything. I just learned that, the market can take your money. It was like, I didn't know you could lose. Like I was literally that shocked. I'm like, well, when I was talking to the first person about what I did on my stake, they go, well, where did you put your stop? I'm like, well, what's a stop? I mean, that's about how much I knew. And then,
well, let's very quickly answer that question, Noah, because we get that question a lot from new traders.
We just got it in the chat.
When you buy a stock, what does it mean?
Well, you're buying an asset that goes up and down in value, including to zero.
Mark says stocks just go up.
Stocks just go up. Stocks, on the other hand, they do other things.
Emily, yes, they do. Emily, I know Tim was a fantastic. Me and Tim joke around, guys. Don't take me and Tim joking around as anything serious, Tim. Emily, just in truth, Tim is one of the finest mentors in the history of this business, in my opinion. Nobody that I have seen in any mentor takes the care that he does. Okay. And that's the only time I'll ever say this publicly. No, I'm kidding. I've said it many times. But Emily, you said, Em, you mentored with Tim. He taught you about portfolio design. And is it true that the one account you blew up was the one account Tim did not design?
I did hide one from him, and that's the one that I ended up blowing up, because he really, really did.
Oh, you were ashamed of the trades in that account, weren't you? You knew what he would say.
It was going down. It was going down bad. But yeah, I mean, I learned how to design a portfolio from Tim. And talking about separating those accounts, I had to separate my retirement accounts from my trading account so that I didn't make those mistakes. And so the one account that I did, blow up, I was okay with the capital that was in there, because I told myself, this is where I'm going to make all my mistakes. So yeah. I blew it up, and I learned from that, and and kept it going ever since.
Did you go into that? And I'm just asking out of pure curiosity here. Did you go into that saying, if I lose this money, that's fine, I'm just going to learn from it? Was that kind of the philosophy?
Well, no, not at first. It was after
I over leveraged.
Yeah, it was after I over leveraged and had no stop loss, and then tripled up to catch up. And then I said, well, this is the account that if I just blow it up, I'm okay with the capital that's in here.
Okay, so after you blew up the account, you're like, well, since it's gone, I'm okay with it, and I'm going to learn from it. I like it. So
first of all, that's one of my pet peeves. Hold on. When new traders tell me this is just play money, I'm like, well, yeah, the market's going to play with it once they put it in Goldman Sachs.
Well,
bank
yeah, why don't you
account.
just
enjoy playing with it?
That's exactly.
Play with it.
I promise you, some hedge fund
That's
manager's going to
exactly what
really enjoy
happened.
that moment.
The hedge fund is the big bully on the block that's going to take your new toy and play with it all day long.
All day long.
Yeah. Tyler, what about you? You raised your hand. You blew up an account. The architect. Are you telling me the architect of the Matrix had some mistakes growing up?
This is before he was the architect.
Okay.
Yeah.
I like it.
Mine was just lack of risk protocols. I lost a little bit, and then I lost a little more, and then I lost a little more, and I just didn't have any kind of overall portfolio management risk rules. And pretty soon I was down 50%. And you look back and you say, well, I don't know how that happened. So just not having any idea of risk protocols was my flaw. And this was the very first account I traded.
Mine was, I was in an option trade and not understanding position size, right? Not understanding delta, theta, vega, gamma, not understanding the Greeks. Just wanted to buy a call option because it was cheap and I liked the stock, right? Yeah. And the stock gaps down on me because when you're new, all you think about is call options, right? That's what you do. You buy call options. And the stock gapped against me. I lost probably 75, 80% overnight, right? Because that's what happens on an option contract, correct? And I was staying in the trade and I talked to my mentor. And my mentor told me, I've told this story before, but my mentor said, he said a lot more harsh language to me at the moment, but he basically said, Matt, I could go through all the different ways why you're not going to make money on this trade. Or you can just close the trade, accept your loss, and put that money to work where it's going to work. Now, later on, I realized what he was saying. Later on, I realized that my delta had just got destroyed by gamma, and my delta was never going to go to the point where I'd actually make money on the trade, but I didn't know anything about that. But I closed the trade, shut down the account, reestablished position size rules. If I never done that, I wouldn't be here today because you're never going to withstand that. You know, in terms of that financial decision, Noah, I want you to talk a little bit about prospect theory because I think honestly, guys, what the commonality in every one of these stories is our relationship to money was false. And we all fell victim to prospect theory. Noah, what is prospect theory?
Well, in a nutshell, let me give you a little segue in. There are old traders and there are bold traders, but there are no old bold traders. Prospect theory is the general version. People they experience money differently. If you open up a little graph of prospect theory, it's loss aversion. In a nutshell,
I come prepared.
We do not like losing. And you could offer somebody like a 50-50 bet on a coin toss. And they would probably be like, no, I don't like those odds. I'll risk $100. But if you start out, okay, now you're down $100, double or nothing. It's the exact same bet. The odds haven't changed, but people are more likely to take the bet. They become risk seekers when they are losing. And they experience found money, like when they win, very differently than they experience lost money when they lose. And if you look at that graph, you can see that the way that the $100, $200 loss looms in the psychology of the loss column, you feel it a lot more than you feel the $100, $200 gain. And it's loss aversion and the idea that when people are down, they become risk seekers and degenerate gamblers. So they could have all the risk rules in the world and they work great when they're winning. But if they start to losing, sometimes what happens is people abandon those rules. And basically the guys who came up with prospect theory, they won the Nobel Prize in economics. And it really came down to, the psychology of it. Like they were psychologists and they found cognitive, fractures where people where they would say one thing, but then they would behave a different way when actually, kind of push came to shove. And it's just an interesting way that we're wired as human beings. We're all wired in a very similar way. We feel losses And then once we start losing, we're more willing to let it ride and hope that it comes back.
Oh, I was so right on that analysis, Noah. It has to go back up. It's such a quality stock. It's in a great, we start saying things to us to justify staying in the position when the reality is the only thing you're doing is making an emotional decision over money, which means the relationship to money has been proven false. Money is nothing but a tool. That is all it is. It is a manufactured concept is what it is. It's not real. It's like, I love Christian, and Christian always says it's a fugazi. It's fake. It's not real, right? But it's real to us in how we are emotional about it. And the reason we are emotional about it is because we have to work for it, which means we exchange the time value for the financial value, which means what we're really ultimately doing at the end of the day is we're making a decision over our time. We didn't want to lose the time it took to make the money. We don't want to make it, and we don't want to spend the time in the future to make that money back. When the reality is it's just money.
Right.
It's just a tool.
And the thing is people don't realize they're processing all that information subconsciously. They're not making these decisions consciously. It's just kind of this weird automatic response that people have to loss aversion, and the rationalization, like oh yeah, well, it's good at stock, it'll go back up. Those are the reasons they give themselves. But the actual process in and of itself is very much subconscious, and people aren't even aware of their self-destructive behavior.
Yeah, I agree with that 100%. I mean, the prospect theory is a very simple theory to understand. It is a very difficult theory to master, right? It takes decades to really kind of master that
and
mindset.
For me personally, to guard myself against it, I have to automate the exit process, because I feel loss aversion just as much as everybody else. And when left to my own devices, I will start rationalizing and start doing all those same things. So when I automate like a stop loss, it takes the decision away from me and keeps it where I need it to be.
Yeah. Well, and that's one of the reasons why stop losses can be so powerful, is it takes that decision from you. It's like I always said it, when you're doing the set it and forget it method in the step system and you're swing trading, and you have your entry, you have your stop loss, you have target 1, you target 2, and you have predetermined type decisions already, right? At stop loss, you have no decision to make. It's either going to go to your stop or it's not. You're going to get stopped out or you're not. If it goes to target 1, you have a management decision. At target 2, you have a profit taking decision. Prepping the trade before you ever make the trade really does mitigate the risk to those emotional decisions we do have. Noah, thank you for describing prospect theory like that. I really do appreciate that. And I'm sure our community does as well. I want to shift the topic a little bit, guys, to tradable instruments and asset classes. There are so many things to trade, so many assets to invest in. Old money homes, you made the statement that you tried to tackle everything at first, all of it simultaneously, right? And was that very difficult? I could imagine that being extremely difficult, because I didn't try to do that. I just wanted to learn how to trade options, but you tried to tackle everything. What was, again, coming back to the difficulty of that?
It was monumentally hard. It was, in hindsight, it was ridiculous, right? I just figured that, when I started out, I thought, well, okay, they're going to have some commonalities. I'm a smart guy. I should be able to take all this in and just make it work. That's not how life works. We've all described it tonight. Our kind of our path, we all blew up an account, at least one. We all described our path of becoming who we are. And when I started, I had so little experience that I just thought, I can do this. I'll give you an example. When I started, I had always skied my whole life. I was, not a great skier, but I could get down the hill without breaking a leg. So I thought, all the kids are trying snowboarding now. So I thought, I'll grab a snowboard and I'll try that out. Well, when I got on that thing, it felt like I had a 2x4 strapped to my feet. And I spent 4.5 hours rolling down a hill with this 2x4 strapped to my feet. And then I went back to the ski lodge. I grabbed my skis and I went and skied the rest of the day. I just naturally thought, since I was a wakeboarder and all the skateboarder, all this stuff when I was a kid, I thought, oh, this will be easy, right? Well, I thought the same thing about trying to learn trading and trying to learn real estate and trying to learn all this stuff all at once. It was foolish. It was foolhardy. If I could go back and do it all over again, I would focus and become really great at just one thing. And I think everybody here actually even said that tonight too. Frank's the breakout king. M's the Iron Condor queen. You know what I mean? Like we've all got kind of our niche things that we do, and when you do them really, really great, you have so much success. And then if you want to add some other stuff in, totally works, right? But if you try to do it all at once, and believe me, I've taught a lot of students that have tried to do exactly the same thing. Oh, I want to learn call ratio back spreads, and I want to learn covered calls, and I want to learn this, and I want to day trade, and I want to do it, and yet you just your focus isn't there, and it's a daunting task that I don't know anybody unless you got a photographic whatchamacallit, could actually do it. It's just too hard, and there's no need for it. Like I said, you learn one thing really well, your success will be there. And the beauty of that is once you feel that success, your confidence grows. Once your confidence grows, you can start to tackle bigger things. And I don't know, it's just a better way to go. You look at the most successful people in the world, your athletes, your doctors, your scientists, they all focus on one thing. Well, shouldn't we just focus on one thing too? I just didn't know that at the time. So,
do you guys agree with this? You focus to build wealth and you diversify to protect it.
Fair enough.
Yes, absolutely.
Yeah.
Tim?
It's a good statement. I mean, even in business, you can't do everything, right? So focusing on something that you really want to go for, absolutely, I think so. And then over time, as you diversify, you pick up gold, you pick up land, you learn how to trade the markets, you can help yourself protect it. So I think it's a smart statement.
We all have our favorite tradable instruments, whether it's stock options, commodities, or currencies, cryptocurrencies. We all have our niches. We all have our favorites, those types of things. But let's talk about the suggestions and recommendations and advice we can give new traders regarding at what point, like what areas of the market they could focus on initially. Because guys, I'll be frank. Sometimes I wish I would have started buying stock before I learned options. I think I would have had a cleaner journey, right? Because when you first start with options on a low dollar account, some days it's really good, and other days it's like the end of the world just happened, right? Why is it that you think that most new traders, when they find the market, get so attached to the options market instead of the equity market? Yeah, go ahead, Noah.
Dopamine hits on the brain.
Yep. Leverage.
That's it. It's leverage, gives you a rush. Rush is exciting. When you win big. It's like, wow, that was amazing. You get a big old dopamine hit, and then it creates an addict. It's a good thing. But you just need to come back and work with an instrument that you're leveraging on. You can build yourself up to that.
Do you think options specifically is a market that new traders should focus in?
Absolutely not. I think you said it best there, Matt. Stock is a good place to start. I'll give you another little story here. I was out in the golf course once with this was when I was pretty new. I had thrown out a bunch of credit spreads on the indexes, and they were far out of the money, so I had a really high probability, and I was just killing it. Just a hot streak. It was insane. I was laughing with my buddy on the golf course saying, "Oh my God, this is so easy." The moment that word came out of my mouth, I could actually feel my phone start to vibrate, and all my positions went against me. And that leverage that you get from options, it can cripple you very, very quickly. And if you're not A, emotionally ready, or B, prepared for that, like from a trading standpoint, from an operational standpoint, it's gonna be painful. You know what I mean?
Let me press you on that just a little bit, Greg. If your opinion, and again, this is a subjective bias type conversation, because I'm sure there are many traders that would be like, I love options. Options allow me to leverage my money, all of that jazz. The benefits of options are well stated, and everybody loves them. But how long trading equity do you think you would get enough experience before you feel comfortable with a new trader, not yourself, but a new trader saying, now I'm ready to trade options? Are we talking weeks, months, or years here?
Well, obviously everybody's different, but I said it before, proof of concept. If you can go out and you can buy 10 shares of a $10 stock and you can make actual money, and I don't care if you make $5 or $1,000 on it, if you can consistently make some money doing those types of trades, then you can say, okay, let's start trying it with some options. Let's start to introduce that. But you've got to be able to prove it to yourself. And hopefully you've got somebody that you can soundboard off of, a mentor or a teacher or somebody where you can show them, hey, you know what, I've done this and I've got this working. And once you can do that, once you got, it's like having a working car, like Henry Ford having a prototype. You know what I mean? He's got to have a car that he can drive down the road before he's going to set up a factory to start building a whole bunch of cars, right? So he's got to have that. He's got to have that start. And I think when you use equities, you can. There's some really great stocks out there that are $5 to $10 per share. So even with a low dollar account, you can go and you can trade Under Armour, you can trade, GoPro, you can trade Marathon Oil. You can trade all
Newmont Mining. You can trade Newmont Mining.
You can trade all of these things for low dollar stocks, and you can get your feet wet. You can figure out your order types. You can figure out your stop losses and your position sizing, which is so important. You can get all of that out of the way, and then you can start to introduce that leverage, whether it be Forex leverage, whether it be option leverage, and eventually maybe even futures leverage, which is, it's all scalable.
That's a graduate program. The futures market is that graduate program. Frank, I want to get your take on it. Options versus stock. Obviously we love options, Frankie. There's no doubt about that.
For sure.
But we've been trying to push out the message. There's nothing wrong with buying a share, right?
There absolutely
Give me your
is
take
not.
on that.
Well, and especially now, some of us stodgy old people, I'm still getting used to $0 commissions on stocks and ETFs. So for so long, it didn't make any sense to buy one or two shares, right? And commissions would vary from place to place. But even if you're spending like $5 to get in and $5 to get out, your cost of business just never made any sense, right? So we've went into a brave new world where, of course, I can buy one share of stock. And so what if it's $2.92, right? That's $2.92 I didn't have before. So, I still believe, I say this to a lot of people, that we haven't really wrapped our head around how nice that is. It's cool, right? Yes, everyone likes $0 commissions versus any dollar commissions.
What it does, Frankie, is it opens up the stock market to those low dollar accounts, because when we were young traders, guys, and I know the old dog traders from the 80s and 90s are going to laugh at this, being like, oh, you puppies had it really, really good. Yep. But, I remember the first broker I opened up was Options Express. And why did I open up Options Express? Because that's what my mentor told me to do. Yeah. So I did it.
$14.95 commissions.
$14.95
then down to $12.95, right?
Out, right? Oh, you had to call and beg for the $12.95, and eventually I got it down to $9.95. But even at that, you buy one share of a $100 company, that doesn't make any sense. You're never going to make money, like ever. But now that you have zero commissions, I do think the equity market is opened up for, these new traders, so they don't have to deal with the leverage in the options market. Let me get Emily's take on that. Emily, what do you think on equity versus options for new traders?
I absolutely love that idea. And for me, when I got started, and this was only just 5 years ago, but even when I was considering whether to trade options or stocks, I leaned more towards options because of commissions in stock. But now with commissions being free, there not being commissions on trading stocks, I absolutely love that idea for somebody who's completely brand new. Find those low dollar price stocks with obviously volume, they're liquid, and just start that way. It's all about, learning how to read the chart. So whether you're looking at a Forex chart, 6 months later, or a futures chart, just start with stocks, get comfortable clicking those buttons, find where the buy button is, find where the sell button is, as you learn about options and everything else.
One thing that's cool.
Yeah, go ahead, Frankie.
Not to cut you off, Maddie, but a little bit before this meeting, I just for fun ran a scan on what I would consider tradable stocks under $20, over 1 million shares, small cap or bigger. So no little nano cap, the next, big, whatever type of things, still optionable, still shortable. and I came up with 249 of them.
Yeah.
You know, some of them would be immediately disqualified if I look closer at the chart, but I would bet I could put together a pretty good watch list that had just a little bit of everything: retail, restaurants, gold, silver, aluminum, right? Some tech, you know, some utilities. I could probably put together a really good, you know, trading watch list that I could do a lot of good work off of at those lower prices.
Many of the bank stocks, many of the energy stocks, many of the basic material stocks, many of the industrial stocks all kind of fit those. You know, it's the new trader who looks at, you know, these stocks going parabolic from 20 to 300, like, oh, I can't do that. Well, that's not the market. You know, Zoom does not represent the entire marketplace. Apple does, but not Zoom. You know, Cody, I want to bring you in for a second.
Can I interject for 1 second?
Yeah,
there, Matt?
Go ahead, Greg.
So we talked about me being the dividend guy here. There's also dividend paying stocks that are under $30 too. You've got a whole bunch of them out there that are, you know, world-class companies that everybody knows, and you can trade a few shares of those too, right? You've got AT&T, you've got EPD, all these great dividend paying stocks they're not expensive. They're not $100, $200 stocks. So even if somebody's got that investor mindset or leaning towards that retirement mindset that we talked about, they can start with a little bit of money and make that work as well. So I didn't want to leave everybody out thinking, you know, we only got to go down the trading path. You can do both. It is available out there.
I like it, Greg. And very quickly, guys, I know for the pro member community, we do have a mastermind group that starts at 8:30 Eastern. That was 6 minutes ago. We apologize for going late, but I want to maintain the conversation and do it the justice it deserves. We will start that mastermind group immediately with Coach Noah, immediately following this show, and we'll try to quickly sum it up. But I do want to turn to Coach Cody, because Cody, we were talking about, you know, blowing up accounts, leverage, and options versus stocks. Cody, I want you to tell the story about how you decided to blow up an account.
Oh, that's a fun one. So yeah.
By the way,
my
he never ran
account,
this past his mentor, like ever, ever.
No, I did not. Matt was my mentor at this time, and he did not know about this trade I was doing.
If he would have told me he was trading UVXY, I know everybody at Tackle knows exactly what I would have said.
What I was doing was I decided to start doing long calls on UVXY before Brexit. So as volatility is spiking, I'm trading a option, which is 1 to 10 leveraged ETF on a 3 times leveraged ETF. That's
basically, he was Mark McGuire taking steroids.
I was leverage on leverage on leverage. And when it first popped and Brexit happened, and I was like, oh my God, this is glorious. And then what happened to volatility after that?
2 days, Cody.
It took everything. So like within the first day, like I was like, oh my God, I'm a genius. I'm the smartest trader in the world. And then within the next week, I watched it not only take back all the profits, I watched it take my entire account to zero. It blew up my entire account that Matt had designed for me within a matter of 2 weeks. And
by the way, and I took a lot of effort designing that at Buffalo Wild Wings too, Cody.
Yeah, yes,
I saw the napkins. Cody kept the pictures. It's a great picture.
Awesome. Yeah, it's awesome.
So that was my blow up story, is that, and I had that moment where I didn't, I mean, in Texas, there's no mountains to go up on top of and pray, but I did go for a nice long run where I just threw my music in. I think I did like a 6-mile run that day where I was just like, I couldn't even believe what I did. The fact, and it didn't even go to zero. It went below. I had a margin call on me. I had the broker saying, hey, you need to send us money because you've destroyed this so much. I went against my mentor. I leveraged options against a triple leverage ETF, and I thought I was smart, and the market proved me wrong, and it took all my money away from me. And that was
Cody knows exactly what I would have said if he would have called me, which he didn't because he knew better. I would have said, that's the dumbest shit I've ever heard in my life, Cody. What in the world are you doing? And that is the kindest way I would have put it to. That's with filter attached to the YouTube channel.
Yeah, live on YouTube. That's the way he says it. What he would have told me on the phone would have been harsher words. But but from that, from using options and learning how to use options versus buying a stock, and we're talking about these commissions and things. Whenever there were the commissions, it was hard to get into stock trading because of that, $5 in, $5 out, or $10 in, $10 out based on your broker. But now with zero commissions, if you're starting with a smaller account and you don't have option ability, or you just don't want to go to margin or something of that sort, if you're trading just a few stocks, then you need to realize that look at the percentage that you're making off of your trades. Don't worry about the dollar amount. We all want to see dollars hit our accounts. But if you can make a swing trade and you follow the rules and then you have a successful swing trade, and that swing trade moves in your direction and you make 20% on that swing trade in a week, or let's say you're doing, you know, even something smaller than that, you know, 3% per week. If you have a $300 account and you make $90 on a swing trade, that's a 3% move. And that's a really good move on that account. And you need to realize that look at percentages, not dollars. If you can compound that type of percentage move per month, trading just single stocks, 1 share here, 2 shares here, 5 shares there, on these lower dollar, you know, around, like Coach Greg was saying, you know, $30 stocks, you can do more with it. And then when you focus it on the percentage, you can keep your mindset in check to where you're realizing that your account's growing at a faster rate, looking at percentages. If you focus on the dollar amount, you feel like you're not doing that much, but you really are. As traders, we have to think in percentages, not in dollars.
No, it's a big moment in all traders' careers when you actually believe that and not just say it.
Right.
Because $10, you know, it doesn't change our life. $50 doesn't change our life, right?
$10 on a $100 investment is a 10% rate of return. You've got
exactly,
to think like that.
Exactly, and that's math is math, right? It's 10% on 1 share or on 100 shares or on one
Unless
option
you're
contract.
the Fed, and then math is inflation.
Well, yes, but we're not the Fed.
I am triggered by certain things with the Fed right now, so we can't go down that. But would you guys agree that this would be a good plan for new traders if they truly want? First of all, if you are new to the options market, guys, go over to Tackle Trading, become a pro member, and watch Options 101. That will give you the foundation you need to understand the options market. Education is absolutely key in this. But what do you guys think of new traders simultaneously making equity trades in the live account while simultaneously doing the same trade in a virtual account? And when they have a bigger win-loss rate on the option trade, they can finally switch to options. Or maybe not a bigger, but equal.
Always, yeah, I 100% think you should do that. And I think it's a great idea to mimic the trade you're doing so you can actually see, because it's not hard to learn how to buy a call option. Let's be honest.
No, absolutely not. It's as easy as buying a stock.
It's the way that they move, because they have different things that impact them, right? And understanding those things, like you know, on some of your, you know, misadventures in your early days, and pretty much all of us too, not understanding how they move and why they move that way, that's what can be a little bit difficult. So if you're comparing apples to apples, hey, I've got, you know, 1 share of Home Depot and 1 call option of Home Depot, you know, it's very clear, right? It's very clear whether it was a mistake on your technical read of Home Depot or something's up with the option contract. I love the idea, Maddie.
Yeah, I like that. Question for every coach, rapid fire style. What is your favorite tradable asset class in the financial markets?
In a bubble, it's stock. In a bubble, for me, it's easy, it's clean, it's straightforward, no nonsense. I don't live in a bubble, right? So
you do. You are the number one person that was built for a pandemic. If anybody wants
would like to live in a bubble, but reality is reality. But
you've been living in a pandemic for 15 straight years. You were.
It is true. I was. It is very true. I was definitely prepared.
Yeah. No, a favorite tradable instrument.
Well, you know, I'm going to say options, but you couldn't have options without that underlying stock, could you now?
There you go. That is a politician's answer right there. That is you should run for president right now. No, I like that.
Are you kidding? I don't want my skeletons pulled out of that closet. That's a terrible idea.
Well, that's why we have the choices we do. Old money homes.
You're probably not going to like this answer, but I got to say futures. It's the cleanest contract. There's no there's no time decay. There's no there's leverage, obviously. I would say the futures contract. It's just super clean. It does give you leverage, but
I don't hate that at all, Greg.
You do have to know how to handle it, because the leverage is it's big. So
I like it. Cody, favorite tradable instrument?
Oh, that's easy for me. As the Forex kid, I got to say the Forex market. Forex is always seen as a complicated instrument, but it's actually, I think, one of the easiest macro markets to understand. And we just like understanding when earnings are, we know when certain bank releases are going to happen, and it's simply a simple technical trade based on what you're seeing on the chart, and then on top of that, back when there used to be interest rates, you could be cash flowing as you're holding a position within it. So you could cash flow using the interest rates and the delta based trading through the Forex market. I think the Forex market is a very clean market. Once you really understand it, it's actually simple and not difficult.
You kind of jump on that, Cody. I feel like people really misunderstand the Forex market, right? They think it's something that it's not. They actually think Forex moves faster than equity, and it doesn't. It just feels that way when you're over leveraged, right?
They also think it's more complicated than stocks.
It's not. It's not. When you think about the top-down approach to the equities market, guys, you're talking 4 major indexes, 11 sectors, 110 industry groups, and 500 stocks just in the S&P 500. When you're talking currency, there are 7 currency pairs that you truly have to understand. And then once you understand that, it's easy to look at the cross pairs. So I would say the number one difference in equity versus stock is you truly got to understand central banks in Forex trading.
I can get through my Forex watch list before any of y'all could get through your stock watch list. I guarantee
you could get through your Forex watch list before I got done saying one sentence. Like
that's right. It's so easy to click through those. And that's not only just the major 7 against the US dollar. I'm talking about the major G8 against each other. So we're talking 27 different cross pairs, but to go through that list is very, very quick. Very quick, very easy. If I don't see a trade setup, I just keep clicking. As soon as I see one, I'm like, oh, let me analyze this. It's simple.
Yeah. Tim, you favorite tradable instrument?
It's not close. It's options. You know, the complexity is
what is it about the options market that you love?
Well, just with the experience that I have the ability to do a lot of things that other people probably can't yet. It is the most complex in my personal opinion, because you have all the option Greeks, the delta, the gamma, the theta, the vega. And I like the complexity. My brain works that way. In fact, one of my favorite trading books, I quoted it in today's Tackle Today blog, is from Dr. Van Tharp. And he always says, you don't trade your market, you don't trade the markets, you trade your beliefs about the markets. And yeah. I believe the markets are complex. So I look for complex ways to approach them. For some reason, it clicks with my brain. And I'm a cash flow guy, so I love selling cover calls, you know, naked puts, that kind of stuff, hedging with put options. So it's options for me.
Yeah. Em?
Options for me, options all the way. I am starting to like the futures market, especially with those micros that are out now. A little bit less leverage than the standard lots on the futures, so I'm starting to like those a little bit more. But options for me.
I like it, Tyler.
Oh, I was gonna say options, but I think the older I get, the more I like stock actually. So I think
talk to me about that. Go into some detail. Yeah, welcome to the team, buddy. But why though, Tyler? The older you get, you start gravitating more to equity because you are one of the most knowledgeable option traders I've ever known.
Well, and in me saying stock, I mean it's like asking me which one's my favorite kid. I mean, it doesn't mean I don't love options. I think the point that I would emphasize is just. I guess with age, it's more account size gets bigger. It's hard to deploy a lot of money in option trades. You got to have a lot of positions. So I think that just as we say, when you have a smaller account, options are partially attractive because of leverage, but partially because they're cheap. I think as you get older and you get more capital, it's hard to deploy money in options when you want to put in a big chunk of money. So I think just having an asset that you can park more money in than options, get paid dividends, look more longer term. I think you appreciate longer term accumulation and wealth building as you get older. So it's a multitude of factors, but I think primarily just having a larger account size.
Yeah, I like that. For me, I love the market. I love what Tyler said. It's like trying to pick my favorite kid, right? I mean, I think at the end of the day, you want to get a skill set in all of them because Whereas you can trade options on anything. A certain amount of times the equity market becomes really, really easy. And sometimes it becomes very, very, very difficult. And you can say the same thing about the Forex market and the commodity market. Being a well-rounded trader, having the ability to go to the market that is trending, I think is powerful. And, the futures market is, as I get older, the futures market is kind of I'm with Greg. I think it's the best active trading market. It's the most liquid market. The bid-ask spreads are extremely tight. It's a 24-hour market, so you don't have to deal with the gapping situation. It's very similar to the Forex market in that capacity. Especially in earnings season, I really love the futures market because I hate earnings season. Maybe because I got to break down every single earnings chart in the halftime report, and it gets me a little unduly influenced there. But I love the futures market. You can trade commodities, you can trade currency, you can trade, your energy groups. You have a lot to be able to trade there, but you got to be an expert in the field to be able to go to the futures market. It truly is a graduate program. I love Forex at times. There was 3 straight years where Forex was my favorite trading vehicle. The older I get, I kind of agree with Tyler. I think new traders get so fixated on the margin that they lose the simplicity of the equity market. The equity market, in my opinion, even though I do agree with Greg on the futures market being the most liquid, the equity market is a one-to-one transaction, very similar to the futures market. It's either going to go up or down. You don't have to deal with time decay in the equity market. You don't have to deal with volatility and implied volatility, historical volatility in the equity market. I think for new traders, they absolutely should start in equity, right? Although my favorite, I think with a lot of you guys, the same thing, your favorite changes based on what's working for you at the time.
Yeah.
Right. Okay. But I just think new traders should really focus equity first. I think it will do them a lot of justice long-term.
I do believe your perspective, Frank's and Tyler's, is accurate, though. The longer people trade, the more they do embrace stocks, even if they do have futures and Forex and options and all the other stuff.
And very simply, why? Yeah. Compounding interest through covered calls and dividend. That's why. Yeah. It's simple. Greg, talk about the power of compounding dividends and cash flow.
Well, it's one of the things I used to teach my clients when I was a financial advisor was the rule of 72, right? The law of compound interest. So if you can make 10% a year, every 7.2 years, your money's going to double approximately, right? Well, if you can start amping those gains up, if you can start selling some covered calls, and especially now you've got some world-class stocks out there paying 5, 6, 7% dividends, right? And then you add some covered calls onto that. All of a sudden, you're compounding, you're doubling your account in timeframes that people just don't even imagine.
They can't grasp the concept of it.
Exactly. They can't fathom, doubling their account on a safe stock, in 5, 6 years, 4 years even, depending on the dividend that you're getting and the covered calls that you do. I've always been a covered call guy. You guys know that. I think it's one of the most fantastic things because I feel with a little bit of education and a little bit of help, you can master that strategy and you can change your perspective on the world. Like, when I used to be a financial advisor, I couldn't tell a client that I could get them any more than 6% per year because that's the best the money managers can do. Well, I know as a trader and a passive investor that's peanuts. You know what I mean? Yeah. And you just got to put some education. You got to get some coaching in there. You just got to get in there and learn it and get really good at it. And then that compound thing will just become such a, people talk about it, but they don't really understand it till they see the numbers,
Greg, and that's kind of what I want to talk about and what I want to leave our community with tonight is, and I think we all agree that it doesn't matter where you start or what you start, it's that you do start, right? Yeah. And don't you hear us say this all the time in the halftime report, but don't chase the dreams of getting rich quick because you don't have a tendency to keep it. When you don't have a strong relationship to money, quite frankly, you're not going to keep it at the end of the day. It's just not going to happen. And so the message I want to leave with is really quite simple. It doesn't matter how much money you're making at first. Too many times new traders focus on how much money they make today, this week, this month, this quarter, that they don't understand the power of compounding 5-10 years from now. And even if it's just a small sum of money in cash flow, Greg, give me one of your favorite covered call stocks. Don't care what it is. Coca-Cola. Okay. And Coca-Cola, great trend for a covered call, by the way. Yeah. But Coca-Cola, $47 stock. Okay. $47 stock. Now, to be able to do a covered call and to do the equity market the right way, you want to get to the point where you own 100 shares. Cody, I loved what you said about Apple yesterday. Cody, tell the team what you said to me about Apple and their split regarding the importance to you specifically.
I said that I can't wait till they split, because once they split, it allows me to pick up more shares of Apple and start doing covered calls on Apple at a greater rate. Because it being, when it does the 4-to-1 split, going from the 440 that it's at down to, $110, it's a lot easier to pick up 100 shares and start doing covered calls. Doing covered calls on a consistent stock like Apple is absolutely beautiful. And I'm very excited for that split.
The reality is, if you're going to do covered calls on Apple at a $400 price point, you probably need a $400,000 portfolio to really do that the way you should, or you're over leveraging your account. So in terms of this, that's one of the reasons why I love Apple too, is it opens the door for cash flow on Apple to a lot of individual investors that maybe could have bought 25 shares at $400, but now they can, position size to 100 shares and start compounding the gains. So Coach Greg gave me Coca-Cola. Coca-Cola is one of the most boring stocks in human history. It is up there with AT&T. And I am not saying that as a bad thing. I'm saying that as a good thing, because Greg, we like to stay bored when you're making money and you're cash flowing, correct?
Absolutely.
Okay. So the message I want to leave everybody with is, guys, even small sums of cash flow compounded over time is absolutely life-changing. And so if we start with 100 shares, and no, I believe you're doing a mastermind group on the Tackle 25 later tonight, right?
Heck yes. As soon as we're done here, I'm going to run over there and put on a good show.
All right. Okay. So we're going to end on this, and then we're going to do the mastermind for the pro members. But Coca-Cola here, if I picked up 100 shares of Coca-Cola at $47.22 and I'm in a margin account, okay, I'll do it in a margin account. But if I'm in a margin account, I only have to put up half the cost, right? So now the broker's not going to let me lose their money, but I only have to put in half the cost, and half the cost of $47.22 would be right about what? 20, what would that be? 23.11 or 23.61?
62, yeah. 63.
Okay. So I need to invest $23.60, we'll just say 62 cents. So if I buy 100 shares and I buy it at an average price of $23.62, math's hard at 7 o'clock at night. And now I'm not going to even compound the dividend here, but this is one of the reasons why you like Coca-Cola covered calls, correct, Greg? You get to compound the dividend as well. But I'm not going to compound the dividend. I'm just going to get the cash flow here. So now if I come to the options market, and no, I want you to kind of teach our community this in the mastermind group, but if I come to the options market and I sell a 30-day contract on Coca-Cola, say the $48 strike price, let me just make sure I got the right, yep. Somehow I just chose that 40 Delta contract. So I'm going to sell the 40 Delta contract, which equates to, click on that bid there, equates to $83 in cash flow. Now I'm going to ask all of the community. Okay. I'm going to ask all of the community, is $83 in cash flow on a monthly basis, would that fundamentally change your life? $83 in cash flow. And I want Team Tackle to answer. If you made $83 in cash flow per month, would that be life-changing money? Yes or no? Now, as Team Tackle answers here, now what can I do with that $83? Okay. Well, if I'm a consumer in America, I could go buy me what? What could I buy for $83?
One grande latte at Starbucks.
Okay. One. This is 5 years later when the Fed really does target inflation.
One tank of gas in Hawaii.
Okay. Or my truck in Utah. Okay. Emily, what could $83 buy you, darling?
That's probably some game on iTunes for my son on some whatever.
It's called Toon Blast for me.
Something. I don't know. Injustice.
I promise you, I've spent more than $83 on Toon Glass, but don't tell my wife. Tyler,
so
what could
sick of it.
$83 buy you? What $83?
Oh, I could go buy a nice bush for my yard I'm doing.
Nice little bush. You're doing some landscaping.
That's
you want to
right.
get some bush, some shrubbery, right? Some shrubbery. You want to get that? Okay. So what else can $83 buy? Well, $83 can buy more shares of Coca-Cola. And so what you do when you're making that $83 is you say, okay, let me take that $83. And again, coming back to the price would be $23.62.
62, close enough.
62.
61.
We're getting $83 in cash flow here. And then we come down. Now, for me, ladies and gentlemen, I believe in saving money in asset classes. How many of you guys agree with that? Saving money in asset classes.
Here.
Okay. Can we finally put to bed the saving strategy? Like, is that finally dead, saving money?
Just look at the US dollar.
Okay, it's finally done then. Okay, good. We're on the same page. So save in asset classes. And so what I would do if I was a new trader, you don't have to do this once you get to veteran status because you're just compounding and you just compound the gains. But, take your own money, especially when you're new, take your own money and just go buy 2 more shares every single month. $40 of your own money, just $40 of your own money, save it into Coca-Cola or whatever asset class. And so what you're doing is you're buying an average of 2 shares a month of your own money, and you're taking the $83 in cash flow and you're compounding that back into the thing, which means you're buying an average of 5 to 6 shares every single month. Now, that's not a big deal. The difference between 100 shares and 105 shares is not a big deal. But you know what, guys? As in life, it's a race. It's a race to how quickly you can get to 200 shares, 300 shares, 400 shares, 500 shares, 600 shares, 700 shares, and so on and so forth. And so in your first year of doing this, you might say, well, Matt, I only got 157 shares. Well, yeah, that's 57 more shares of Coca-Cola that you did not have, that you basically bought instead of buying a couple cheeseburgers or McRibs if you're Coach Mark. Now, in your second year of trading, so Tyler, if instead of saving money, you saved into Coca-Cola or whatever Coca-Cola was back then, all of a sudden now he's saving in an asset class. And by the age of 22, Tyler Craig isn't saving money. He now has a savings account of 201 shares, which means now he's doubling his cash flow rate. At 22, he's now making $166. And you know what? That's not life-changing money until you get into year 3. And then all of a sudden the race gets to 300 shares. And all of a sudden year 4, you got 500 shares. And all of a sudden that compounding gains just starts adding up to the point where you're actually compounding more money on a monthly basis than what the initial investment was in the first place. Compounding gains is the 8th wonder of the world. He who knows it makes it. He who doesn't pays it. Ladies and gentlemen, regardless of where you start, do not have the get rich quick mindset. Stay long term. Focus long term. The short term will take care of itself if you have a vision for where you're going to be 5 to 10 to 20 years from now. And for the traders that say, well, Matt, $83 is nothing. Well, that's fine. Tackle trading might not be for you because we're never going to be the get rich quick nonsense. It's not going to happen. $83 is life-changing money. I'm willing to bet there's a hell of a lot of people in America today that 5 years ago, if they would have sat in this webinar and started the compounding process, they wouldn't be struggling with paying their monthly bills. They wouldn't be begging the United States government for an unemployment check, or they won't be able to put food on the table. Financial literacy and financial education is the #1 most important concept you can learn in your life, and it takes time. But ladies and gentlemen, stay with Tackle. We'll get you there. Tim?
I love it. By the way, I've loved the chat tonight. It has been one of the best parts of this entire thing. And I got to tell you, people are engaged. They're fired up. They're enjoying this. And I think the message is resonating, Matt. You know, the one thing that I've always said, and you've heard me say this many, many times, people overestimate what they can do in the short term. They think they can just run out and learn a new skill or whatever it is in like 5 days, but they underestimate what they can do in the long term. Learning to trade properly. What was the answer Tyler gave as to the number one mistake he wishes he could go back and change? He did not start his IRA early. He wasted 7 or 8 years of compounding on all those things. I mean, these are lessons from veterans that I think everybody can embrace for sure. 100%.
No, and I agree with that. But if you don't treat a small account like a big account, you're never going to have a big account.
Yep.
It's not going to happen. There's one way to do this, and it's the right way. And, tackle trading doesn't have all the answers. There's a lot of great educators. There's a lot of great systems out there. I just know that we're going to do whatever we can to help our community and their journey. And I just wanted to, give a special shout out to the coaches. This is what I love about the coaches of tackle trading. Tim, we call them up and we say, hey guys, we're going to get on a webinar. You want to join us? And every single one of them are like, hell yeah, let's get on, let's have some fun. It's just, they come on here, they're spending time with our community. They're spending time away from their family, away from their kids after a long day trading and doing what they do best. And so I just want to give a special shout out to, I want to call him Mad Dog Greg. Old Money Holmes or Mad Dog Greg. One of the two, but for Noah and Nam and Greg and Cody and Tyler and Frank and Tim, just, special shout out. Thanks for coming on, spending time with us, and special shout out to Team Tackle, guys. Showing up and I know our community cares about one another, cares about the journey the same way we do. And that's what I love about this community. So guys, thank you so much for coming out, supporting Tackle. Thank you to the coaches, and go ahead, Cody.
I said real quick, we are on YouTube. So guys, if you enjoyed this show and you really love the content that we put out here, make sure you hit that subscribe button, like this channel. Hit the bell so you get all the updates when we go live on YouTube. And if you want to become part of Team Tackle, down in the description, there's always a link to try that free trial, 15 days. You can join and become part of Team Tackle. If you're new to our channel and you really love what all these coaches have put together, make sure you click that bell and click that link and sign up for that 15-day free membership.
Awesome. Guys, you are absolutely amazing, Team Tackle. You are amazing, Coach Noah. I believe you got a nice little webinar on the Tackle 25 Mastermind group starting here in about 5 minutes. So Team Tackle, let's shift over with Coach Noah and listen to the great Noah walk you through the Tackle 25. And Noah, do you have a topic or you just Q&A? What are you going to do tonight?
Well, you're muted.
You're going to be on mute. 50-50 probability.
First thing I'll do is unmute. I just mute myself.
Noah, you know what I'm seeing right now? A little bit more gray in your beard. Maybe your mind is slipping a little bit. You don't know when to come off mute.
Possible.
What is going on here?
Gandalf, that's what he is. Okay.
I have a toddler who likes to scream, and so I hit mute.
No, I'm just messing with it.
And I'm way too old to have a toddler. But yes, we're going to have a good time tonight. We're just going to be breaking down Tackle 25 stocks, looking at what's setting up, what's talking about. And we're always talking about trade management, how to roll the calls up, how to roll them down, how to call her. Especially coming out of earnings season, I'm sure a lot of folks have got some Tackle 25 candidates they want to discuss.
Love it. All right, guys, we are out. Thank you so much for coming on this Wednesday night, and we will see you bright and early in the halftime report tomorrow.
Awesome. Thanks, everybody. See you later.